What's up YouTube, it's your boy Rhett back at it again with another video. Today we're going to be talking about whether the Bitcoin bank BlockFi is legit or not. If you watch the end of the video, you're going to see how BlockFi is able to charge interest rates on Bitcoin and USDC, US dollar stablecoin, that are way higher than what you're going to be able to get in any traditional savings account. And on top of that, I'm going to be showing you all the major risks that are involved with putting your money into a platform like BlockFi. And again, just like all my other videos, none of this is financial advice. I'm just sharing my opinions so that you can hopefully come to your own conclusion with a little bit more information. Before we get started, go down below, smash the like button for the YouTube algorithm. That's going to help everyone on YouTube figure out whether BlockFi is legit or not by watching this video. Now that you've done that, let's go. All right, so first, what is BlockFi? BlockFi has three products. The first product is a lending platform that allows you to take out a US dollar loan against your Bitcoin as collateral. These loans have about a 10% interest rate. It can be a little bit more or a little bit less depending on what your loan situation is. And the loans are over collateralized, which is just a fancy word for saying that if you want a $500 loan, you have to put in more than $500 of Bitcoin into the lending platform to get that $500 loan back. And that's just so BlockFi can sell or liquidate your Bitcoin position in case the price of Bitcoin falls or something and they need to recoup the cost of the loan from you. This over collateralization strategy is actually a very prudent financial move by BlockFi, and it's in very heavy contrast to the lending practices of traditional banks. Fractional reserve lending has caused tons of problems in the financial system, and it's because people are allowed to take out loans that they can't pay for because they're not collateralized by something like Bitcoin. The second product on BlockFi is an interest-bearing account that yields 6% on Bitcoin and 8.6% on US dollar stablecoins. And the third product on BlockFi is an exchange where you can buy and sell Bitcoin. The BlockFi exchange is actually a little bit overpriced in my opinion, so if you're looking for the best place to go buy Bitcoin, I made a video about that a couple weeks ago that I'll link up in the cards up here. Definitely check that video out if you're new to Bitcoin. If you're buying on Robinhood or Cash App even, don't do that. Just go watch that video and do what I tell you to do there. You're gonna end up spending a lot less money on fees, and in some cases, if you're buying on like Robinhood or PayPal, you don't even actually own the Bitcoin, so you definitely want to avoid those. The fourth product that BlockFi is offering is the world's first Bitcoin rewards credit card, and that's actually not out yet. It's gonna be out later this year, but I'll definitely do a video reviewing that card when it does come out. So those are the services that BlockFi provides, and the one that stands out to most people is the interest-bearing account that yields 6% on Bitcoin and 8.6% on US dollar stablecoins. As a comparison, my high interest savings accounts are currently offering 0.5% interest, which is 12 times lower than the Bitcoin percent interest on BlockFi and about 17 times lower than the US dollar stablecoin interest that BlockFi is offering. Because of these huge interest rate differences, a lot of people wonder if BlockFi is a complete scam or not. It seems way too good to be true that they're offering 6% interest on Bitcoin and 8.6% interest on US dollar stablecoins when traditional savings accounts are only offering 0.5% interest. And the way that they're able to offer you this interest is actually pretty simple. They take that 10+% interest that they're earning from the person that's taking out a Bitcoin loan in product number one. They're taking a cut of that 10% plus for themselves, and then they're passing the rest of that interest onto you as a user of the interest-bearing account. So now most people's big question is, why would anyone even use that lending account? How are they able to offer this interest-bearing account? Because who would even lend Bitcoin for 10% interest? That doesn't make any sense. I'm gonna show you why in a second institutions and retail bros like you and me are using this lending option and why it's actually really helpful. So let's talk about the retail bros first. Let's say you bought Bitcoin back at $10,000 when I made my first video about Bitcoin back in late 2020. If you had held that Bitcoin to today, you would have 5x'd your original investment. It's gone from $10,000 to a little more than $50,000. If you sell now, you're going to realize capital gains tax, which is anywhere between 0% to 37%, depending on your tax bracket and depending on how long you've held the Bitcoin for, if it's a short-term capital gain or a long-term capital gain. That number is probably going to come out, that 0 to 37%. It's probably going to be around the 20% range for most people, 15 to 20%. And that's a lot of money to be spending on a capital gains tax for selling your Bitcoin. So if you were thinking about selling your Bitcoin to buy a house or get a down payment on a house or a car or something, you have to actually factor in the fact that you're going to be paying that 15 to 20% likely capital gains tax. It might be a better financial move for you to instead take out a US dollar loan with the Bitcoin as collateral, pay for the down payment on the house or the car. If the value of Bitcoin crashes, you're not going to have to put up up any additional Bitcoin because BlockFi will just liquidate your position. They'll have their money from the loan and you will have paid them in Bitcoin for the loan. And now the transaction is over. And this allows you to pay for your down payment over time as well. And on top of all of that, you're avoiding that nasty 15, 20, 30%, whatever it is, capital gains tax that you would be incurring from selling your Bitcoin on the open market. So that's really the big use case for individuals like you and me. Next, let's take a look at why would an institution go to BlockFi, give them Bitcoin, and take out a US dollar loan at 10% interest. Institutions are borrowing from BlockFi in this way because they're using that loan to execute a really popular trade that's going on right now where they can make up to 25% interest a year. So they leverage BlockFi for a loan and they're getting that loan at 10% and they're happy to pay 10% because they're getting 25 or 30% on the back end when they execute this trade that's going on right now. This trade is a little advanced if you have no experience trading in futures, and depending on the platform you're using, the capital requirements to execute this trade can be really high. On some platforms, it's around 5 Bitcoin, which is currently more than $250,000. Basically, how this trade works is the institutions are buying 5 Bitcoin at the spot price, which is just the market price, the price that you and I can go buy Bitcoin for on an exchange right now. So they go buy 5 Bitcoin on an open exchange, and then they go into the futures market and they sell a futures contract for 5 Bitcoin 1 month from now. So they've entered an agreement now to sell those 5 Bitcoin that they just bought next month. And the way the market is right now, those futures contracts are priced 2 to 3% higher than the current spot price of Bitcoin. And every month out you go, the futures contracts get 2 to 3% higher next month, and the month after that, and the month after that. And this market structure is called Contango. If you look up Bitcoin Contango, this is what you're going to find. So when these institutions execute this trade, there's actually basically no risk on their end, as long as they're executing the trade properly and they have enough money to finance the trade. So if you're getting a 2 to 3% interest rate per month, that actually comes out to 25+% interest for the whole year. I'm by no means an expert on this trade, so if you want to see exactly how this trade works for yourself, there's a great video out there done by Trader University that shows you exactly how this trade works and what the upsides and downsides are, and I'll link that video down in the description. So that's how BlockFi is able to offer these really high interest rates right now. It's because people and institutions are really happy to pay 10+% interest on loans that are backed by their Bitcoin. BlockFi just takes some of that interest and then passes the rest onto you in your interest-bearing account. So next, let's talk about the risks. The first risk with this whole system is key management. You don't hold the private keys when you store your Bitcoin in a platform like BlockFi. So there is risk that the custody provider that BlockFi is using just mismanages your keys and loses your Bitcoin. However, I think there's a really good argument to be made that BlockFi's custody providers, namely Gemini and Fidelity, are going to be a lot better at custodying Bitcoin than you are. With that being said, some people are really uncomfortable giving other people their private keys for a good reason. And in the words of Isaiah Jackson, not your keys, not your cheese. If you don't own the keys to your Bitcoin, it's really an IOU on someone else's Bitcoin. BlockFi effectively holds your Bitcoin when you do this. And that's just like a relationship with your bank. If you've ever been frustrated because you couldn't withdraw your money from your bank, same kind of thing. It's not actually your dollars. The bank is holding your dollars for you. It's the bank's money. So that's the kind of relationship that you're entering into here with BlockFi. The second risk we're going to talk about is counterparty risk. At the end of the day, you are trusting BlockFi to operate in a way that minimizes risk to your position. This means that they're always over collateralizing loans, not socializing large losses from maybe their institutional partners, and properly vetting those large institutional partners so that they're not taking on more risk than they should be. I think something that can help you better understand the counterparty risk that you're entering into when you use something like BlockFi is a podcast that I'll link in the description between Preston Pysh and the CEO of BlockFi, Zach Prince. If you go listen to that podcast, you're going to get a way more thorough explanation of the risks of BlockFi than I'm going to be able to give you here. Additionally, I'll link up another podcast in the description that was done by BlockFi's head of risk management, and you can go listen to that if you're looking for a really deep dive into the risks of using a platform like BlockFi. The third kind of risk that I'm going to outline here is just black swan risk. And by definition, this black swan blow up risk is going to be unpredictable, right? We don't know how it's going to happen. Some people have suggested that if there's a large price run up in Bitcoin, maybe people will go to BlockFi and all try to withdraw their Bitcoin at once. And if BlockFi's risk management strategy is not done correctly, then maybe this tanks the whole platform or something. I think something like this is is incredibly unlikely. Obviously, because it's a black swan risk, it is by definition incredibly unlikely, but that risk is always around, so it's something that you should consider. It's not really something that I can give you details on, obviously, because by definition, this kind of risk is completely unpredictable. So should you be using BlockFi? In my opinion, BlockFi is a really trustworthy, legit company. They have a lot of very public, very transparent leadership and investors and just general decision makers in the company. And that gives me personally a lot of confidence in the product and in the team. But at the end of the day, I can't make a risk management decision for you. You have to make this decision on your own. Bitcoin has historically gone up over 200% a year on average over the last 10 years. So you have to weigh for yourself, how much is it worth to you to get 206% interest on your Bitcoin versus 200% interest on your Bitcoin? Maybe that math changes for you if you're really not confident that you can custody your Bitcoin in a safe way. If you're really sketched out about just keeping your cold storage Bitcoin in a vault or in a house or in a safe deposit box or something, and you're not confident that you can do that for yourself, then you're going to be accepting counterparty risk anyway by custodying your Bitcoin with someone else. And in my opinion, if you're accepting that counterparty risk, you should be compensated in the form of interest. So to me, leaving your coins in BlockFi is similar to leaving it on an exchange, except when you leave it on an exchange, you don't get any interest. And when you leave it in BlockFi, you're taking some risk, but you're getting interest in return. I'd say the best thing for people to do here is to get out a pen and paper, do a little bit of math, figure out what percent of your Bitcoin are you willing to risk for that 6% interest that you're getting in BlockFi. Maybe it's 0% that you're willing to risk, maybe it's 10%, maybe it's 50%. That's gonna be a very personal decision. It's gonna vary a lot person to person. If you watch any of Andre Jick's videos on YouTube, they're very entertaining. It seems like he has almost all of his Bitcoin in BlockFi. Whereas if you watch someone like Andreas Antonopoulos, he's very into the technical side of Bitcoin. He's probably been self-custodying Bitcoin for like 10 years or something now. And I think that there's no chance that he has any of his Bitcoin in a product like BlockFi. So it's a totally personal decision. There is no right answer to this question. I have about 10% of my Bitcoin stack in BlockFi, and I really look forward to getting that interest payment at the end of each month because it's actually a meaningful amount of money and it's so much more than I'm getting in my traditional savings accounts. If you want to get started on BlockFi, I have a link down there in the description. You can get started right away. And if you deposit $100 into the interest-bearing account, BlockFi is going to give you $10 of free Bitcoin. And if you use that link, BlockFi is going to give me $10 of free Bitcoin, which is really awesome. $10 of free Bitcoin for everyone. BlockFi is like the Oprah of $10 of free Bitcoin. Look under your chair right now. It's $10 of free Bitcoin. If you learned something from this video, go down below, leave it a like. That's going to help other people on YouTube find this video, and then they're going to learn something, and then we're all just going to get so much smarter than we are right now. I don't know how my skull is going to handle how big my brain is going to get over this next year. It's going to be really pretty crazy, I think. My brain might even start oozing out of my ears. That's how big my brain is going to get. And your brain. So like the video. Like the video for brain ooze. Go comment down below if you think BlockFi is worth it. I'd love to hear your opinions. Also, if you have any questions, go ahead and leave those in the comments as well. I do answer all of the comments. So if you have any questions, I'll try to get those answered right away. And then subscribe and hit the notification bell for more tech, money, and success videos every Monday at 10 a.m. Eastern. The channel is still growing at about 100% a month, which I still think is totally crazy. So keep subscribing and I'll keep buying bigger buses for all of us to fit in. We're gonna need an 100-person bus soon, which is pretty nuts to me. I don't know if they make buses that are that big. So maybe we'll have to like tape 2 buses together or something to fit all of us in. That's it for today. I love you all. Goodbye.